Low face. Hope everyone's doing okay. Dollar's had a phenomenal week here. And if you notice, we have this breakout occurring here in the Dixie just based upon this line. One thing to keep in mind when you're trading is intraday, a lot of markets can break out through trend lines, channel lines. It's how the candle closes. So on the daily, you don't know until the end of the day. And I really think that we're real long in the tooth. I have no RSI telling me that, the dollar's going to pause, because pretty good reading up here at 78, 79. But there are a couple things that tell me it's possible. And one of them was the euro. So you go back to the euro, and I had this descending triangle here from 1434 to 1509, which was about 70 pips, and we tested this breakdown here, and we have 70 pips. Okay, 1340 was really the target. We've overshot it. Again, a confirmed low, but the potential of some reaction after this decline, which has been a long grinding decline since the Fed. So the point being, everyone who turned bearish on the dollar after the Fed, no matter where they bought it, even if they were in before the Fed, are severely underwater, probably have been liquidated out. But I'd be looking for some type of recovery. Doesn't mean it's the end of the dollar rally. When you look at it, there's potential for sharply higher. So we'll see what this rally, if we get one, really generates. I think eventually we will take out this 113 low, and just a simple measurement move, 113 to 115 is going to take you to new lows to 111. And I've had this line drawn for a long time. May take some time to get there, but this action is pretty negative, on the verge of a breakdown, and thinking that maybe we could even trade all the way down towards 108, which is going to push the Dixie up towards the 98 level. So you just take a look at this range here that we've had, 94 to 98, and you tack on 4, it gets you up towards par. Anyway, 98 and a half just on this little wedge. So still constructive, the dollar. That's been part of the domino to take metals down. And now the last domino that may finally be rolling over. And I do want to welcome investing.com viewers. I know this is your bailiwick in S&Ps, and you could see that we're on the verge of turning lower on the week after rallying 61.8, and we have the 200-week moving average up here. Excuse me, it's a 50-week moving average. Similar picture in NASDAQ. NASDAQ's been a little bit stronger as of late, but it's back underneath the 61.8 retracement. So I know a lot of bears are looking for, something like this or worse from here or in this area. We'll take it a step at a time, a day at a time, a week at a time, and, perhaps we just get a pullback to 66. And then if we take out 66, then maybe we're talking 64 to 62. So that's not a call for new lows at this point, but it is a call for a correction, which is happening across many different instruments in February. January, all markets were higher, had banner months, energy, the precious metals, equities, and now we're in a give back stage, in my opinion. Crude also hanging on by just a thread, but looks to me like we're having a pretty negative week and just hanging on by thread to this support level. And remember, back last fall, crude and the market went down together. They went up together, bottomed in January. So potential for them both to go down together, and not calling for, a crash in crude, but why not a correction in crude? So we're setting up corrections. This looks pretty achievable, this 50-80 level in crude. and then we'll take it from there. Potentially, we're just going to get one good break in crude. 48 would be a real nice entry for then another move higher, and probably by then the corrections are over in a lot of different markets, crude, precious metals, and perhaps S&Ps. But the dollar is really the linchpin, and if it's really heading above par, really is not a healthy thing for markets. It says that we're still deflating, and there's still going to be pressure on emerging market economies, and eventually that's going to spill over with a strong dollar to hurt multinationals trying to export. So the key to a lot of this also is a yuan. And we put out a great blog post that you guys need to check out on the metals and yuan. So here's gold trying to recover. Actually, a decent day. Are we going to blow to new highs in gold? Are we going to get some type of failing rally? I don't know. So there are times I don't know. And the silver was much weaker, deeper decline. But, you know, if you're bullish, you could probably say this is ABC, and then we're going to go. Or what you could have happen is you could have ABC and then a failing rally, and this is A, and then you get some type of failing rally that ends up being B, and then you get a C. So, you know, I'm not expecting an important low in metals until March, April timeframe, but we'll see. This could, you know, take some of the enthusiasm out of the market, a lot of bullishness in the metals now. So even if it moves sideways, if you're not making new highs, some people will become disillusioned and move to the next thing that's going vertical. What's in style this week, guys? So I want to tip my hat to two great trades that were made this week by the team. And the first one was called out here by Steve. These were the highest payday yen crosses trades, and Steve was talking about it up here at major resistance up here, non-confirmation, big trade, right? And well, looks like we could get a third drive here and then a recovery. And then we had a pattern in play by Blake that was just as dramatic, and this was for our subscribers. So you really should consider for $1 checking out the high quality analysis and FX ideas, and you just, and we get a pattern in play. Thank you, Amanda. You know, and you have active patterns in play, so closed pattern in play. Blake went to the door probably. Yeah, look at that. So 1.59, Grega closed his Kiwi before Kiwi headed short. What great timing by him. Steve took profits on USD CAD. So as you can see, now they're not all winners, but a lot more green than red. So also you could learn by not just going with the pattern in play, but, you know, learn what's behind them, right? So you go there and you check out the research. And that way, you're able to learn how to repeat these things because of the analysis that you get is educational all the time. I mean, we do great charts here at ForexAnalytix. So I encourage everyone to at least take a trial. It's $1 in 10 days. You'll know one way or the other. And if you're unsatisfied, let me know and I'll send you a refund. Okay. I have a great interview today. Somebody counting, they're always going to be losing trades. If your hit rate is better than 50%, Rob Jean, you should be making money if you set up good R-to-R trades, risk to reward ratios. So, you know, any hit rate over 50 is good. So yes, there are losers. And also, don't even do this unless you're using risk capital. If you're trading with scared money, you're not going to make good decisions. That means you shouldn't be trading with anything except what you can afford to lose and not affect your lifestyle to take care of your family and yourself. And suitability is not talked about a lot these days. But I'll tell you what I used to do when I was a commodity broker and had my own IB, that I would tell the prospect before he opened the account or she opened the account is to visualize the check that they're funding the account, visualize striking a match and lighting it up. Yeah, postage due. And if that made them nervous, it wasn't risk capital. So that's never the intention, but that's the truth. So it should be risk capital so that when you're wrong, it's just another trade. And when you're right, it's just another trade. That's what you want to get to. What I've noticed in myself and I've noticed in others is you get real elated when things are going well and you're in the zone. And if you go too far that way, if you go through a period of a couple of drawdowns on your account, you'll go fetal and you'll get dejected. So the key word in our business, and write it down after you close any position, win, lose, BE, next. And next is a good segue for bringing in Blake. Blake, great pattern and play on Kiwi Yen. Congratulations.
Thank you. How you doing today?
Good, buddy. How about yourself? Is it Friday yet?
It's getting close.
No, one more.
we're getting there. We're getting there. We're on our way.
So
yeah.
You think the dollar's a little overdone here now?
I do. I picked up a little euro this morning, and I have a bid a little bit lower than where we're currently at. But I picked up small position just because I'm just trying to play it a little bit to the upside. I like you. I think that it's eventually, going to break lower. Let me get you over to my screen here. So the last update with the euro dollar, if you guys got if you guys use ForexAnalytix, the euro dollar 4-hour chart is nearing key support, which comes in at 130.115 through 30, with the 4-hour RSI very oversold. We could see a bounce soon. You can see the 4-hour right into channel support. Okay. There's the 88% retracement comes in at 113.14. We were trading at 113.28 when I posted that chart, and I picked up a little bit, but I have a bigger bid down at 131.20 because it's already bounced here, and now I'm looking for a little bit of a move like this, maybe one more low. Oh, shoot. Here we go. Let me do this.
That's how I do it. Shake your hands.
one more low, and then I'll get a little bit more aggressively long. That's what I'm hoping is going to happen. I do have a little position just in case I'm wrong, and it just continues up from here. The thing about the euro is it was very oversold. Let me delete this. I'll delete some of that. It was very oversold, and to me it looks like that will probably bounce here now. I'd be a seller on any move up to 114. So that's for me, that's exactly what I would be doing, is just waiting for a little move up to 114 just to get out of it. But ultimately, I think the euro dollar is going to break lower, but it's been a really nasty drop. And look at the 4-hour RSI. It's extremely oversold. So you got to be a little bit careful here. Now, equities are under pressure, which is putting some downside pressure on the dollar yen. I actually closed out my dollar yen short at 109.76, I think. I've been shorting it near 110, and I covered some yesterday, then I shorted more up here, then I covered some this morning, not down where we're at right now, but I do believe that a break below 109.50 is going to signal a much deeper correction. Wow, the pound's really pounds bouncing here. Look at that big bounce in the cable here.
Any new Brexit news coming in on this?
No, it's the Bank of England. Carney's speaking right now.
Okay.
That we just had the Bank of England decision, kept rates unchanged. But
Okay.
it was very dovish. The statement was pretty dovish, but some of the comments are obviously sparking a little bit of a reversal at this moment.
If I may interrupt just for 1 second, Blake, sorry about this.
Yep, no problem.
Carney said that some senior government ministers have speculated about delaying Brexit. That's
okay. Got it. Okay. Speaking of like some of these comments that are coming from the Bank of England, it's pretty clear that they're not prepared for a no-deal Brexit, or I don't think you could ever really prepare for a no-deal Brexit, but they know that those are the real big risks right now. So the cable, and there's been a lot of downgrade to growth and inflation outlook, and they keep citing that the lack of activity is due to the uncertainty surrounding Brexit. So the Bank of England seems very keenly aware right now of the risks associated with Brexit, but the pound is seeing a little bit of a reprieve here, and I was very skeptical about shorting the cable down here. We did probe just below the 38% retracement, and we're bouncing. I wouldn't be, put it this way, I wouldn't be short the cable here. I don't know if I'd necessarily be long, but I wouldn't be short the cable. You look at like currencies like the euro pound, for example. Let me get it really quick. Where is it? There it is. Okay. You look at the euro pound, and this has been our analysis. This,
I like that.
Yeah, it's bounced back to previous support. 38% retracement was going to turn us lower, and it has. I actually been kind of scalping around, shorting the euro pound up at the 88 pence level, and I already covered it. I've already been in and out, but I've just kind of been picking off a little bit, knowing
so
that
makes euro your preferred short and cable your preferred long.
Well, yeah,
that way.
Just for now, but yeah. I think, but I'm one of the reasons why, and this is our analysis from the euro pound yesterday. One of the reasons why I'm a little skeptical about being too aggressively short here is that I do think the euro is at support as well. So, not only the euro is at support down here, but I think the cable is at support. And one of the things about the pound is it's held up extremely well, even based on, the broad-based dollar strength that we saw yesterday. Good and point. That was, that was noted in the analysis, the end of day analysis yesterday. The cable is holding up well considering the US dollar strength across the board, which will risk a bounce higher if the US dollar pulls back. Now,
great analysis.
Thank you. But it's one of those, you look
How
at
do I sign up, Blake? It's like a decade. Well, just the Aussie yen and the Kiwi yen, if anyone just did a one lot on those, it paid for a couple of years of being a subscriber. Just one trade.
Yeah, the New Zealand yen really
immediate gratification on that one too, bro. Nice.
That one worked out pretty quickly. It was not. It was this descending wedge, and I closed mine and the pattern in play actually ahead of the rollover period. So it didn't quite hit the target at 74.30. I closed it at 74.45 because it was just before the rollover period, and I hate rollover. Rollover is, for me, is the worst because the spreads are so big. They're so big and so wide. I just I closed it out. But anyway, if you're a little bit more patient, you just waited another hour, you could have made a little bit more there. But yeah, that rolled over really well. The Aussie yen, as Steve pointed out yesterday, rolled over really well as well, and we're really at very important levels as far as the market goes. So let me do just a quick overview of some of these pairs. So we got the euro down at channel support, as I pointed out. Got to be a little careful about shorting down here. Cable, giving us a nice little hammer, 4 hour. I think the cable may be at risk of a move back up towards 130. The Aussie dollar, you notice the Aussie dollar is actually holding horizontal support. Now, I don't know if this support's going to hold here, right there. I don't know if that support's going to hold. I think eventually it's going to break, but that doesn't mean that we can't see a near-term bounce as the intraday charts try to work off some of these oversold conditions. I think that is that's entirely possible before we make our way down towards 70 cents. The Kiwi, really nice Gartley pattern reversal. We came off beautifully with the Kiwi, some data obviously, and his weight on the New Zealand dollar. But now I would be looking for a move up to 68 cents. Any move back to 68 cents is going to be a selling opportunity for me. So, in other words, I personally, I'm looking for something like this if we can get it. And that's why I'm preparing a little bit for some dollar weakness, but any dollar weakness that I see, I'm going to be using as an opportunity to be a buyer. All right, the dollar Canadian. What a squeeze in the Canadian. And matter of fact, we had this bear flag pattern. It's been negated as far as I'm concerned. So I've not been trading the Canadian dollar. I know Steve was short the Canadian. He closed it out at a pretty good price because he saw the turn coming. Before it broke out through this 131.80. I think on his pattern in play. Steve closed it. He had moved up his invalidation to 131.80. So once it hit there, it invalidated, but it basically was in profit. So that was a wise decision on his part. Now, the U.S. dollar Mexican peso, I just took profits on the U.S. dollar Mexican peso at 19.17 today. Banxico meets today, and we are looking for I'm looking for a move out of this 19 to 1920 range. So a move above 1920 would be pretty bullish, and I'm looking to buy it there. Now, hopefully we get a little dip down towards 1910, then I could pick it up again. But I took profits as we were up against that triangle resistance. The Swissy took off without me, so I'm really not doing anything with the dollar Swiss. But you notice this rally, the recent rally going up to the 78% retracement up at 1.0040. We didn't quite make it to the 78% retracement, which I thought we would, but that shows a lot of divergence in relative strength. So you got to be careful there. Now look at this. Look at the Nordic currencies. The U.S. dollar, Norwegian krona. We hit a high today of 158.99. If you look at the analysis from the U.S. dollar Norwegian krona the last couple of days, let me find it. Did I miss it? Did I skip over it? Oh, there it is. Here's the analysis over the last couple of days. The U.S. dollar Norwegian krona is approaching downtrend line, which if broken could turn the tide higher for the pair. We closed U.S. dollar Norwegian krona has broken the downtrend line, which suggests we could stage a short covering rally to the 860 level in the coming days. We closed above the downtrend line, which now puts the 860 level back in play. Bears, be careful. And then this morning, the U.S. dollar Norwegian krona is almost at the 860 level as expected, but the 861.34 level is the 50% retracement. So, we've created a pretty massive short squeeze from 850 to almost 860, 859. And I don't know if it's run its course, but I think it's probably close. We could, retest this resistance here. We could retest that resistance there, but I think a lot of it's run its course. Now, one other thing I want to point out is the U.S. dollar Swedish krona. This has been a massive squeeze out of this bull flag pattern. Oliver in our chat room, he pointed out this other trend line yesterday, but it blew right past it. That one here. We blew past that resistance, but this is a pretty bullish pattern. So I would be a little careful about being short the US dollar Swedish krona. As a matter of fact, you know, you got to be careful, in my opinion, being short the US dollar in general with this Swedish krona moving higher, right?
You were pointing that out for over a week. It was also a chart of the day, Blake, that it indicated dollar strength. You know, you brought up Oliver. He's become a pretty good trader being part of this community. In fact, he thinks that the dollar is a false breakout up here.
Wait, hold on. Where's Stelios?
I am here.
Oliver.
What's it?
How do you pronounce his name?
It's okay. Say it as you want. It's Olivier, but it doesn't matter. It doesn't matter.
No, I like Oliver. I think Oliver's better.
There's an extra letter in
there.
That's
American.
We know who we're talking about.
That's ugly American, Blake.
Yeah. Us Americans. Olivier is like hand lotion. Oliver.
Sir Lawrence Olivier.
Okay. It's Olivier. Okay. All right. So anyway, I like Oliver.
Okay, Blocky.
You can call me Balake. I don't care. Anyway, so hey, you know what? Greg is from Croatia, and that's the only thing that really matters to me. All right. Anyway, hey, I'm going to pass it over to you guys. I hope everybody has a great trading session. Remember, if you haven't visited our sponsor, Forest Park FX, make sure you do so you can be part of the ForexAnalytix community and have your trading pay for your subscription so you can be part of it, because that's where all the cool kids are at. All right, so with that being said, Steve, good morning. Stelios, have a great morning.
Good morning,
Coach. Have a great morning as well.
Okay, thank you, Blake.
Thanks, guys.
Thank you, Blake. All right, Steve, I've got a couple of things to say. Yes.
Give us more information about Carney.
Yes, chili con carne. Well, first of all, Blake mentioned it. We had some employment numbers which missed out of New Zealand last night, so that's why Kiwi has been underperforming. It had done really well since the beginning of the year. Now it's giving some back. It's probably time for that. Now we had first thing this morning. We had some more German data which disappointed. Industrial production came in at -0.4% month-on-month versus +0.7% expected. So more negative data. And it really does look like the German economy is turning. And today, the European Commission, they updated their inflation forecasts, and they, surprise, dropped everything. The Eurozone is now expected to grow at 1.3% from 1.9% in 2019, and then up to 1.7%, I think, if I remember correctly, in 2020. But the bottom line is they've slashed the growth forecasts, and for Germany, it's down at 1% or something like that. It's actually below Greece, and Italy also has been slashed from 1.2% to 0.2%, and we had the Italian finance minister today saying that it is not a real recession what Italy is seeing, which is odd because they've had 2 consecutive negative quarters. But in their view, it's not a recession. You know, do what you want with that information.
It's not a real recession, Stadio.
Yeah, it's a fake one.
It's unreal. Yeah.
Yeah, exactly. And then we had the Bank of England. Okay, no move in terms of rates that was expected. We have the quarterly inflation report, and the Bank of England also lowered economic growth forecasts for 2019 down from 1.7% to 1.2%. You know, they were a little bit more dovish, but as I mentioned before, there were a couple of comments from Carney which kind of alluded to the fact that maybe a delay of Brexit is being considered. You know, we all know this could happen, but you know, who knows? So at the moment, the pound actually is.
That's not exactly a monetary policy comment.
No,
right?
it's not. You're absolutely right.
It's a political. Let's call it an assessment. It's not even that, but having to do with the monetary policy wording, I think, there is no doubt. Carney was quite obvious, and that's not a surprise coming from Carney, is it?
Yeah, and there's not much they can do. The Bank of England can do before Brexit is somehow, we get closure on that. There's not much they can do. He was asked explicitly, what does he think the monetary policy reaction should be to a no-deal Brexit, and he avoided answering the question. He has said in the past that they might need to tighten in response because the pound theoretically would be falling.
Yeah.
Yes, kind of makes sense. Then he backtracked on that. So we haven't, there's nothing clear on that at the moment. And now another thing I want to mention, which is actually a little bit scary, but it just happened about an hour ago. Apparently, France has recalled its ambassador to Italy following some verbal attacks from governing parties in Rome. Whatever that is, it's the first time this thing has happened.
And it's all over the 1930s once again.
It's the first time this has happened since World War II. Literally since World War II. So let's see what that is.
A lot of parallels. Yeah. Unfortunately.
Unfortunately, that's not a joke. Unfortunately, yes.
That's why I said it.
Yeah, true. Okay, interesting, Stelio.
Anyway, let's party like it's 1999.
Stelio, we do have some payroll data coming as well later. True.
No, do we know? We had jobless claims, but really.
We did already. Okay. Oh yeah, we just got them actually. Yeah. 221.
Yeah, slightly worse than expected, but really they're not going to make any.
234 versus 221. Nah, they're not going to really move the market. Yeah.
And for those who trade the peso, we have a CPI out of Mexico in half an hour, and then the interest rate decision later today.
Okay, let's start from the peso then, and not accidentally, the peso has spent several days consolidating. So obviously, today's CPI print and the interest rate decision can easily be the catalyst for the peso to move once again. As I've said, since several days ago, I would, from a technical perspective, I would favor a move lower from this triangle, another thrust to the downside before seeing some more strength. But it's an interest rate policy decision, so anything can happen. But I would like to see some continuation lower towards 1850, 1860. I think that's going to be cool. Coach, how have you been?
Good, buddy.
Okay. Anything you want us to look at?
Well, we're getting a question. The major theme has been dollar strength. First it was the euro and pound, and then we got then the commodity currencies got hit. So someone who doesn't have a name was interested in your view about the dollar index. Maybe you could comment on that.
As we were saying yesterday about the dollar index had a move lower, which, for sure doesn't look impulsive in nature, right? And in fact, we seem to be breaking higher. We've already had counting today so far. This is the 6th up day in a row. So obviously, we might have some type of a pullback. But I have to say that, the vast majority of the charts, if you have a look at them, they don't hint at dollar weakness. They actually hint of the opposite.
So would these 6 days in a row be labeled as an impulsive rise, Steve?
It's definitely, if you go down to a short, it's definitely an impulse wave. Now, that doesn't mean that it's part of an impulse. You know what I mean?
Right.
The question is what happens from here. And, things are quite simple. I think that this high here, this 96.65 is quite important. We did test it today. We're pulling back from there. I think that if we break above it, we will be revisiting 97.70, the previous double top that we had here sooner rather than later. Don't forget that this is a chart that remains above the 200 daily moving average. In fact, we actually found support at the confluence of the 200 daily moving average and the 61.8 for the last move higher. So, that's also significant to notice where the market, found support.
And fundamentally, Steve, the Fed hit it with the kitchen sink. I mean, a lot of people turn bearish at dollar.
Absolutely.
With the Fed giving, being the most dovish he could be without cooing at the mic. So, you know, a lot of people probably are still wrong-footed and bearish the dollar, and they're getting squeezed.
I think, Coach, that we are in a phase of the market that the market is now going to start getting positioning to their own side of the spectrum, which, you know, we see very often, because it's the combination. We got the combination of the Fed turning dovish, which
should be bearish a dollar.
Which no, it's not, and I'll explain
most
why.
Most people would interpret it that way.
No, because if you remember, the market was getting very worried that the U.S. economy might be turning lower, right?
Correct.
I think that those people are going to proven to be right. But what happened when the Fed turned dovish is that the market jitters that the economy may be turning lower definitely eased up a lot. So what we got in essence was some soothing having to do with the potential of the US economy turning lower. And at the same time, we kept getting data out of Europe that not only Europe, but, you know, Europe is the most important one because, as we've said before, you know, Euro is 58% of the DXY. Now, if you add to that the SEC, Sweden, and the CHF, you know, we have like almost 65% of the DXY is the combination of those three currencies, SEC and the Swiss franc. In essence, the central banks are making sure that they're following Euro quite closely. So more or less, one way or another, you know, directly or indirectly, the Euro has an influence of about 2/3 in what the DXY does. So the Fed turning dovish, which made things, you know, made expectations for the US economy improve, and at the same time getting bad data from Europe, is what put pressure on the Euro USD, which, since we mentioned it, because it is worth to be mentioned, it's currently testing support. It's currently pulling a little bit back, but, you know, earlier today it was actually testing this trend line support. So things are quite simple. If you want for some reason to be long the Euro, you know, this is the place you do it, right? But in all honesty, if we break again below 113, I would not be long in any way or form, right? So, you know, this is the moment of truth. As we had said in advance, you know, USD Swiss is performing better. That was to be expected. But I would be a little bit careful here because, you know, USD Swiss, as Euro USD has actually touched support, at the same time here USD Swiss is touching the confluence of this horizontal support resistance area and the 78.6. And so far we've seen a little reaction today. And USD SEC, since we mentioned it before, is, whoops, wrong place. Here it is. USD SEC is actually resuming its move higher, which is to be expected because we had said in advance that if we do see a breakout from here, you should not try to fade it because we should follow through that, you know, I think will eventually take us to retest this high at 944.75, if not higher from there. Okay, so I think that
a breakout after consolidation.
Oh yeah,
what about
yeah. Because it's in essence it dates back to July. Yeah, it dates back to mid-July. Yeah, absolutely.
Yeah.
So
important.
You know, yeah. So definitely, you know, when you see consolidations of that extent, and then you see a breakout with a candlestick like this one, you don't try to fade that, right? I mean, I do think that this move higher might prove to be terminal, but a terminal move in this case might easily be at least the 100% extension of the maximum triangles width, which, you know, still should target much higher levels. As I said, 944, I think, you know, should be tested. At the same time, as I said yesterday, the RSI seemed to be confirming this breakout, and the fact that we're now trading in overbought territory once again after so long also confirms that the pair is on the move. So, you know, this is not a signal you should be trying to fade, this is a signal that you should be trying to embrace. So in essence, if you see some type of a pullback, most probably you should be buying it instead of trying to fade it.
Okay, and the other thing would be, Steve, we're live streamed on investing.com right now, so a lot of these viewers are equity type people. So I know that you and I have been talking about that we're getting close to the end of this correction up here at 61.8 and the moving averages. What would it take to seal it for you? DAX, DAX and Nikkei. Nikkei actually looks the weakest.
We are getting very close. If you remember, I said that for me, the 200 daily moving average is going to be a tough target to crack, since we've already seen 5 waves up, and we saw some loss of momentum with yesterday's inside candle, and today we're seeing some continuation. I think that how we close the day is going to be quite important, because we potentially have an evening star formation in the making. And I'm monitoring this ascending channel on the daily. As you see, we are currently testing its support today. So I would be quite careful here. If I was long, I'm actually the exact opposite. Because
what are you looking for, Steve? If you're right, I know you always have targets in mind. Say we have peaked here for this correction. You're looking, 2600 is a big level. Is that something in that handle area?
2675 is the first area of support, but I think that 2600 is doable. Yeah, I think 2600 is doable.
Okay, and this is the guy you called why don't you show Oz again also, Steve, since that was something that was forecast before it happened. You showed it being against key resistance. You said your risk reward was being short, and it's a rising wedge. So how deep could it be? How deep is your Aussie yen love, man? How deep is your love? BGs.
I think that we have a lot more downside potentially. We might even hit new lows from a technical perspective. I doubt it, to be honest. Right away.
Ties in with a correction and risk off, right, buddy?
Oh yeah, absolutely, and not by accident. And this used to be one of the best proxies for risk. And
now I remember interviewing you. I'm doing it now.
This used to be one of the best proxies, if you remember, for risk, the Aussie yen. So unsurprisingly, the Aussie yen broke lower one day ahead of the S&P trying to roll over today, right? So I think that that's quite a good signal, and I wouldn't be trying to fade this weakness right here, right now. I mean, because even if this is a corrective move lower that we're seeing, here is the S&P. The confluence. Actually, the S&P hit the 200 daily moving average almost. It's a little bit higher than here. You can see it here because this is not the daily chart. This is a 4-hour chart. And it also reached the 100% extension of the triangle's width, which is, a very nice target for the triangle. Nice confluence of resistances. This is actually what we drew several days ago in the S&P when we were trading out of this triangle, that a move towards that resistance can be, the terminal leg higher, at least for, some time. And, we can see a retracement back towards 2620. As I said, at the very least 2675, which is like the resistance from the triangle at a very, very, very minimum. Okay, so I do think that there's a decent chance that we're going to see a push towards 2675 in the next few days, if not 2625 or even lower than that, then it's 2595, not exactly 2600. So I do think that the risk reward definitely favors in the short term shorts, and let's see how that move unfolds lower, so we can then reassess of what we have in hand. Now, okay, we have some questions. Maybe Euro Swiss, when you've got the time. Sure, let's have a look at it again. USD CAD, oil. Okay, we have quite a few questions. Let's go. Is that bullish ABC on gold 4 hour? It definitely, so far gold, you already saw my chart here. So far gold, yeah, the move lower so far looks corrective. I have to be honest here. So I think probably one more push higher. And keep in mind that would also bode very well with some risk-off move, right? Because what we are seeing today is dollar higher and gold higher. And in general, Coach, we were talking before, we said that we had 6 consecutive up days in dollar, and gold had a very orderly
ABC maybe, huh, buddy?
corrective pullback. Very, very likely. It's the most likely scenario. Yes, it's the most likely scenario here. So I wouldn't be surprised to see one more push higher from here. Literally, if we clear this 13-15 area, I think that 13.30, it's easily doable afterwards. So I wouldn't be trying to fade gold yet, because simply the chart doesn't tell me that I should be doing so. Let's now visit the Euro Swiss that our friend Zach asked about. I doubt it that much has changed since yesterday that we had a look. Actually, it has. So we got rejected from the level I was talking about, and that also points very nicely to risk off, right? So I warned you guys and gals that this was a key level. We got, we tested it. We got rejected from the confluence of this horizontal support resistance area and the 200 daily moving average. So this, in essence, keeps the pair once again trapped between 112 and 114.50. So this is the range you have now in place. And as I said yesterday and the day before yesterday, the risk reward was being short, but if we did clear this 114.50 area, you shouldn't be keeping that kind of a position. You should actually be, switching to longs for a move towards 117. But, the rejection is quite clean. So, things are what they are. Now, we had Steve, with the majority of loans worldwide denominated in dollars at lower rates, and with these loans having to be rolled at higher rates, which will put pressure on these markets as they have to service the debt at higher costs, taking away from domestic spending. Wouldn't this put pressure on their currencies and boost the dollar? Thoughts? Yeah, but you know how it is. This is a double-edged sword, right? This is a double-edged sword because one of the main reasons that the U.S. economy is in trouble is because it is an economy that was built during the past at least two expansionary cycles. During the last two business cycles, it increased its debt by a lot, and the servicing costs of the U.S. itself, will increase substantially. Do increase substantially for every base point. That the yields go up. So why do you see this only as a problem for foreign nations? And don't you see it as a problem of the U.S. economy itself, right? The reason why the U.S. cannot sustain we're having trouble. Everybody was in jitters that the economy is rolling over and going into recession, which I believe it's going to happen within the next year anyhow. But within, this year. We can't even sustain 2.25 because the consumer is indebted in the US as well, and the government is indebted. So it's a common problem. It's a common problem. And yes, the US, theoretically speaking, can never default if they don't want to, because the US has only borrowed in dollars. So theoretically speaking, they can print as much as they want and repay the debts. But that on itself is inflation, right? It's monetary inflation, because inflation, the classic definition of inflation is an increase in money supply, right? So basically, if the US tries to get rid of the debt problem using this method, then the dollar will tank. And then the exact opposite is going to happen with foreign governments. The US is going to be in trouble because now the US is going to have real problems with inflation if that happens. actual inflation, I mean, price inflation. On the other hand, by seeing a depreciation of the dollar, which I think is a matter of time to happen, I mean, a matter of few months, the foreign countries are going to suddenly see a very big relief in financing costs, right, in repayment costs. So that should help the emerging markets perform better in the medium to long term. That's what I believe. Please look into DAX and the FTSE. Yeah, I will. But we had the question for crude, if I remember right, and USD CAD. So let's have a look at both of those, and then we can have a look at those. Okay, so USD CAD, in essence, found resistance, support, sorry, at this conference of the 200 daily moving average and the 61.8. It did penetrate through for a couple of days, but incrementally, and in essence, we're rebounding from there. I don't have a position anymore. And I would say, you know, that especially if we clear this horizontal support resistance area, there is a chance that we've actually seen a low. Okay, so I would be very, very careful here. I see the move, the rebound higher being decently strong. So I'm not looking to load up the boat just yet. Now, having to do with crude, crude hasn't, no, I want another tick here. Where is it? There it is. Crude is actually doing quite well. I mean, it has pulled back somewhat, and seeing this consolidation, I wouldn't be surprised to see, you know, more weakness, but definitely, you know, it's not tanking in any way. So, you know, so far the move lower seems orderly. So I do believe that crude should be bought at another move lower. So I don't intend to do anything between like 50.5 and, you know, 55. But, you know, if we get close to 50.5 once again, I'll probably get involved in the long side once again, if the price action, of course, is proper one, right? I mean, if it gets dissolved, I mean, and, you know, punches through with a 5% move, you know, I'm not going to be doing that. But if it keeps on trading, you know, in an orderly fashion, I would more than happily do so. Speaking of which, I'm going to be showing it every day. So as long as it, you know, approaches like interesting levels, keep in mind that copper still remains decently bid, but we're headed into resistance. So I would be careful the closest we go to 286. You know, we might see a rejection, another rejection from there. If we do cross that area, though, then we have a double bottom, a rectangle, no matter how you want to see it. Anyhow, the technical targets are the same in play, which should target, you know, 30 cents higher. So, you know, I'm paying close attention to it. I want to see what it's going to do from resistance. Now, the DAX and the FTSE. Okay, let's have a look at both of them. Here's the DAX, suffering today, unquestionably. As I've said, between 11,670, which is the inverted head and shoulders target, and 11,000, which is the neckline, I wouldn't be doing much, right? Today's price action is quite bearish. There is no question about it. But 11,000 remains an important level. So, you know, as long as we remain, you know, between those levels, I would be very, very careful. Now, if we do break below 11,000, that's going to be quite a bearish development, and I will be looking for more weakness from there. Having to do with the Nikkei, if you remember, I was looking at this rebound in the Nikkei to be corrective in nature. Initially, I was looking for something like a pennant, like a wedge here. You can see it. And more or less, that's what we got so far. As you see, we're finding resistance at 21,000. You know, the market has memory. You can see that multiple times. It's not by accident that I keep those horizontal support resistance areas for a long time on my charts. You can see that this area that was relevant in the past multiple times as support has now acted at least twice as the resistance. And, you know, I think that the risk-reward ratio definitely favors shorts against this 21,000 high. So it's as simple as that. It's a very, very clean level, and it can even end up being a double top here. I mean, a move below 20,500. You can even see it as a double top, which will target 20,000 again. So I think there are still money to be made here if you want to trade this currency pair. Now, Shanghai Composite, still appreciating towards this trend line resistance. I think that if we break above this 2,650 area, it's going to be quite a bullish development. On occasion I'm showing this, so why not? Let me see if I missed any of the questions. Okay, I think I covered those. Now, let me go to the crosses because, as I said, I want to see more price action in the crosses. As you see, the crosses have had quite an adventurous time. You see moves like this, quite sharp, but in essence, it's more or less some kind of a range. But in the short term, we have a breakout from this descending channel. So I want to see if now that we're pulling a little bit back, retesting this, it's going to hold. I do think we need to remain more patient, though. This is Euro Aussie, Euro Kiwi, the same deal. We did break above this descending channel. I want to see if this is, a real move or something else. Pound Aussie and Pound Kiwi as well. Let's have a look at them. Pound Aussie. I was monitoring at this channel, but if that was the case, if that was a channel, then we got a false break lower and now higher once again. Yesterday's candlestick was, huge. So, it's very hard to fade, candlesticks like that one. So I would be careful here. I would be careful because we might see some more upside, and Kiwi followed higher. I was viewing this as a potential pennant, but obviously that's not the case. Because we moved back within that formation once again. So same deal here. I think we need more price action to determine what's happening with it. USD ZAR, yeah, I don't think very much has changed. When did we have a look at it yesterday? The day before yesterday, something like that. I said that you should be careful if you're short because we seem to be finding support here. So far the rebound is looking good. But as I said, I think that if you really want to be bullish, you want to see a breakout from this descending trend line. As long as we remain within this triangle, that the only trade, if you want to take it, is buying tests of support, selling tests of resistance, and if we get a breakout, reverse position. Of course, I don't know if that's your trading style, but it is a trading style that works as long as you know how to execute it. So that covers that as well. Coach, I know that you have an interview today. Is your guest in the house?
Boris Schatzberg in the house.
Okay. So I think I covered all the questions. So if he is, it's 2 minutes earlier, but go ahead and begin.
Yeah, he's here. All right. Thanks, Steve and Stel. Oh, Stel's at ballet class, and thanks, Blake. And
yeah.
And thank you, Face. I'm real happy to bring Boris back here at FX Flow. So Boris, I'm going to make you the presenter, and looking forward to having a conversation with you after this week in FX.
Hey,
Welcome
Boris.
back, Boris. Welcome back, buddy.
Hey guys, how's everybody doing?
Good, Boris. Thanks for coming back to Face. I know you've had a paradigm shift and you have a newfound passion with machines.
Yeah, although it's definitely testing my my resolve.
Yeah? Okay, good. All right. I want to get to that. That's going to be interesting because, that's a big paradigm shift for you because I always really respect your opinions and the things that you say on CNBC. So why don't we just start off with some kind of CNBC type views and commentary about the strength that we've had in the dollar this week, Boris. You know, a lot of people turned bearish a dollar after the Fed. They thought it was a green light for dollar weakness. They're being squeezed out of these positions. Your view on the dollar, is this the beginning of something bigger that's happening, and perhaps the dollar has a shot to make new highs on the Dixie? What do you think?
Well, let's take a look at DXY, right?
Okay.
Let's do dailies. Let's do let's do dailies.
Yeah.
I mean, you know, technically, the dollar index looks it looks bullish to a point. So we have a higher low, nice little W formation, but at the same time, we are like right up against this whole cement ceiling of 97. Like you know, a dollar is really not it's moving to the upper end of its range. You really can't call it a breakout until we hit 98, which is a long way from here.
All right.
And you know, it's kind of fading. I mean, you know, if we kind of fade out over here and we start making a move to the downside, it could be it could actually be a double top formation.
Okay.
One very
so
cool,
you need more confirmation. You know, I would be looking to buy this next break and look at it as just a pullback from resistance, but you know, time will always tell.
Where would you be a buyer?
Probably around 96 to 95.80 is ideal for me to. You know,
so you're looking to pull back because you think this is a legitimate break.
I believe that we're on our way to accelerate to the upside. The euro looks so heavy to me on the dailies that we're right at major support, and just like you said, the Dixie's at major resistance. So we could have some bounces in euro maybe, and maybe a pullback in the Dixie. But I'm pretty bullish. It looks to me like we have deflate. You know, January was a banner month. You've been around long enough. Am I hallucinating? But in the business, since I came from the commodity side, Boris, we had something called a February break, that you would have good Januaries and then give backs in Feb. So that's what I think is happening with the dollar being the linchpin behind it. Versus metals pulled back. I'm looking for the S&Ps to pull back. Oil's hanging on by a thread. So I'm looking for kind of a red month, at least for part of the month in February. And that would imply a stronger dollar. But I'm supposed to be interviewing you. So why don't you tell me what you have conviction in? And maybe because you've been busy with your algos and everything, you're not spending as much time with analysis. You're just trying to tweak that. Is that what's going on?
Partially, yes. One thing I've sort of been really bullish on ever since we took out 1200, and looks is gold. Looks like a serious shift to me. And actually, let me just go to the weekly chart. I want to see something kind of interesting here. So. And 1360 is, you know, is a big resistance. I want to see something interesting here. This is a big, so this is 24. This was 33. Okay, so I'm going to give everybody in the room a little freebie idea that could really help you figure out trend shifts. So this is a weekly chart of gold, right?
Right.
If you this was no, this is August. This is weekly, so this is really, really far away. But anyways, this is August.
Yeah, that was a crash to 1160.65. Right. You know, it was unusual, Boris. Yeah. That day, the low was made in Asia.
Right. Okay.
Yeah, wild day.
That is a wild day, yeah. So what I kind of wanted to show you here, and this is a really interesting analytical process. It works on any time frame, but obviously I'm looking at a much longer time frame here on a weekly. I call this kind of a trend shift time frame. And basically what you do is you Look at the RSI. The RSI here is 24. Obviously, when you're looking for a shift from negative to positive, you want the RSI to be like 40 or below. You know, the whole process to start when the RSI is 40 or below. When you're looking to shift to be from positive to negative, you want the RSI to be 60 or higher. So obviously, you know, we're 24, but here's the key thing. Where you get a very, very good clean signal of a trend shift is if there is an 8 or 9 point shift in the RSI on the next candle. So here's 24, here's 33, right? That is a that is a very, very big. It's a 9 point shift. That's a significant.
So nine is a what was the number? Bigger than 6?
Bigger than 8 is
bigger than 8.
Bigger than 8 is very significant signal of a shift.
That's a pearl that I've never heard of. But
yeah, it's actually something that I'm working on as a possible new algo for us. And you could see a lot of this stuff on the chart. So here's 70. The next shift, well, this is not quite 8, so it doesn't quite give it to you. Here's 59, doesn't quite give it to you. 53, no. Yeah, I'm looking at the 67, 60. Yeah, gold. The other thing is the RSI shift that I was looking at, and this is obviously weekly, which is where you really, to get the signal on the weekly, you really, really need a massive change in tone. On the weekly, you probably could temper it down to even 6, like a 6 on a weekly. That is a shift of 6 one way or the other, especially if you're at the high. If you're at the highs and you have a -6, or if you're at the lows and you have a +6, those are really interesting turns of trade in the instrument. So right now, we're obviously in an uptrend in gold. I'm still very bullish on this, but very, very extended. Like really, the one thing that bothers me whenever I look at big trend moves, whenever you get so far away from the moving average, inevitably, you're going to pull back, and a lot of times you could correct even more. So this may speak to your idea that dollars is ready to break out, because dollar and gold are very, very inversely correlated. If gold comes down to gold essentially is going to come down if dollar goes up, I think. And so you could see if gold naturally here could go to 1275 with the moving average probably moving up to around 1260. So some corrective move here. And what will give you like a lot of
is if we had a 6-point move back down from the current RSI reading.
Correct.
Which we haven't had yet.
Yeah.
Right?
Yeah, exactly.
Okay.
So let me just look at dollar on the weeklies here. And you may be right. I mean, the weekly is a really nice. The weekly is a nice big shift here. We're coming from 49 to we're like we're making like a 6-point shift on the dollar index here. So a weekly signal, which is always the longer the time frame, the better the signal, because the rarer the signal, the better the signal, right? That's a pretty meaningful move here. Like here's 51 to 57. It's a big shift, and it was a tell that there was going to be continuation of the dollar index. So you may be right.
So we're getting that this week. Pretty, it's 6 up days in a row. It shows a lot of strength.
Right.
I may not get the pullback I want.
Although today may be, we'll have to see. Today may be a little bit of a corrective day. We'll see, because we're coming off the highs. I mean, if we come back and retake the highs, they'll be super bullish. If the dollar index comes back, through the highs today of basically 96.70. If we take that out by the end of the day, that's a massively bullish move. But we're stretched all the way over from the dailies to the weeklies, so we could be a little bit correcting. Let me see on the hour chart. Take a look at this. Yeah,
and then I'd go ahead.
So this is a good example. This is a good example of what so let me show you just sort of my latest toy of trade. So you want to trade short term, right? And I don't trade the dollar index because obviously it's a synthetic instrument that only futures traders trade. But in spot we're trading direct instruments. But here's a good example of the kind of trend shift that I like. So you have 80, which is super oversold. This is the hourly, right? And the RSI here drops 17 points. I mean, that's a big, that is a glaring signal that the dollar index is coming in, right? And so the way I like to trade this, by the way, so I always like to trade it with always a little bit on a retrace. Now, I can't make up a rule for dollar index because I don't really know it, but on the hourlies with currencies, I like to basically whatever is the low, the closing of the shift candle, I put my order short about 5 pips above, and and that would have taken me actually obviously into the trade. I already would be profitable in this trade, and this trade has at least a reasonable chance to break the SMA here. So we certainly can see 40, maybe even 35. So here's a good example of this kind of a trend shift dynamic that is playing out in real time.
Yeah, I've never seen the RSI used that way, Boris, and that's a majority of my work is RSI. Yeah, I call it the real simple implicator. And that's really something I'm going to start paying attention to. Thank you for sharing that with us. So, what a great mentor you are, without even knowing it.
So, not to hump my appearances, but I'm going to be in Orlando tomorrow. Anybody who's in Orlando, I'll be at the Money Show, and this is my presentation at the Money Show tomorrow is all about how the best trading is really done with one indicator, right? And if you look at it, if you look at fundamentals, if you guys, can I show you just a couple of slides from my presentation tomorrow to give you some ideas?
Yeah, sure, go ahead.
So,
also, I think we've covered dollar and gold. What's your gut feeling about this recovery in stocks to 1618 back?
So this is all part of my presentation. So I'm just going to get into it. Just bear with me a second. Right. So I'll show you a couple of slides that I think might convince you of some ideas, or at least my thoughts on this whole process. By the way, before I even get into that, I got to show you this. Everybody's going to get a big kick out of this. Hang on, let me. This is our chat room, but I got to show you this. Yesterday, guess what happened? Oh no, wait, hang on. Sorry, I'm in Kathy's chat room. Let me get into my chat room. I want to show you something. Everybody will get a kick. Look at this. Who's this?
Your mom?
No.
Oh, Janet.
Janet Allen. But you know what?
What?
She could have very well been my mom. She is the nicest person ever. I had so much fun with her yesterday. I was in the green room with her. We're talking Brexit for like 20 minutes with her, but she's great.
Oh, wow, that's cool. Yeah, I used to do an imitation of her. She'd go, "The economy has to be much, muchier better."
She is everybody's grandma. She really is. But she's super smart and incredibly nice lady.
Did you ask her if she was glad not to be there anymore with QT happening and everything?
She was so into talking about Brexit. She was so into talking about Brexit that like we just ran out. I had to go do on air. We ran out. Like we didn't. I didn't even get a chance. Like we just talked about that for forever because she was really interested to see what the FX market was thinking about. Whether this is going to happen or not. So, anyways, guys. So what I was going to say is, and before we get into the macro, here's my whole point about like kind of a simplicity and single indicator idea. This is part of my presentation out of Orlando, so I'll give you a little bit of a preview. This guy name is Jeffrey Sater. He's not a professional breeder. He's not a professional handicapper. He's actually a lawyer. But this guy is probably the single most successful picker of horses ever. And the reason why is because he did all of this. He was just basically a gambling enthusiast, and he did all this incredible research on like what wins in horse racing. And the conventional wisdom was it's a lot of different factors, but breeding was one of them, and you need to make sure how fast the horse was, breeding and all that stuff, right? It all turned out to be complete nonsense. One single indicator is the single biggest determinant of horse's success, the left ventricle, right? The result of that insight that there is literally one indicator that matters the most was American Pharoah, which was the first horse to win Triple Crown in ages, and that was his selection. So the power of the whole idea is that there's so much noise. We have so much access. This is, I started the presentation by showing you this room. I ran into a guy who's actually like a parent in my class who works for IBM, and he showed me this picture. What do you think this is? Do you think it's a utility? Do you think it's the Nuclear Regulatory Commission? Do you think it's NORAD? No. You know what this is? This is the office of Toronto Raptors, okay? Tell me,
wow.
tell me how like this is impressive but idiotic at the same time. This is a freaking basketball team.
This is how they pick players and strategy and everything.
Right.
Everyone's using AI, aren't they? Even in sports.
The point being is that they're looking at 1 million data points, and my argument is, and this is actually proven by a recent investment paper, that the more information you have, the worse you're going to do, because all you're going to do is the more information you have, the more confident you feel, the less accurate you're going to be. The key is to be like this guy. Find one thing that really matters and trade it. So when you're asking me about what do I think about the market? I think the market is going to crash. I think the market is setting itself up. I think this rally is fake. And the reason why I think this rally is fake, because this is the only indicator, in my opinion, fundamentally that matters, which is the Fed balance sheet against the S&P. Okay. And what happens is the Fed balance sheet has basically stopped. We have this final burst of S&P going up, and now
they haven't stopped QT, even though they're pausing on rates.
Right. The point is that here's why we've had this rally. This is the rally. Right. This is the global central banks completely easing their balance sheet after December collapse. After December collapse, look at the amount of liquidity the global central banks have just poured into the market, right?
Yeah, they're trying it again. Was it mainly China or everyone, Boris?
Everybody. PBOC came in, ECB to put his foot off the pedal. The Fed basically put its foot off the pedal, and the 10-year gained 30 basis points, or dropped 30 basis points in yield. Right. So there's just, the point is that everybody stepped off the gas pedal. And as a result of that, liquidity conditions became much bigger. And that's the only reason why stocks are rallying. Everything else is nonsense, right? If you really want to understand why. And so my point is that party is going to end pretty soon. Pretty soon. And I think we're going to correct eventually. We're going to come back down as the year progresses.
Take out the lows. Take out the 2,300 lows.
Interesting. I think it might. I mean, typically the thing about bear markets is they really lull as many people back into the game as possible, and then just destroy them. And it
reminds me of how I felt when I was going through my interview process for membership at the CME. I felt like a piece of rare meat. That all the veterans were looking at me. Here's some liquidity, guys. We could pick this guy's pocket. So so they're baiting people in with this recovery, but nothing's changed as far as the longer term liquidity. So these injections, you think, what would stop them from continuing these injections to keep the rally going?
Well, my point is that every marginal ad is going to have less and less impact, and eventually the problem is that that's going to the truly disastrous scenario that a lot of the really big macro guys are arguing. I don't see it happening just yet, but the truly disastrous scenario is we pump a lot of liquidity and U.S. rates turn up. Like, in other words, because the deficit gets so big. And the Fed is obviously not, the only
rates go up because of supply, because of growth, and lack of liquidity.
Correct. And the Fed doesn't step up just because it really would be against their mandate at this point. And indirect buyers, foreign buyers, just not there anymore. I mean, China is no longer sopping up U.S. Treasuries. So it's interesting. I mean, I don't see the scenario as dangerous just yet. You clearly want you want a couple of sharp drops. I don't think it's going to happen all in one day. My point is you'll get an inkling. Like maybe you could look at my trend shift. If you get a massive sell off where you get like a 10-point differential in the RSI on the dailies in the S&P. That'll be a really big warning sign to you that, hey, maybe the market is going to start turning. And I don't want to be guessing the top.
That's a great tell.
Yeah.
Yeah, I like it.
But my broad fundamental thesis is that this is a purely monetary driven rally, just like by the way, as the other rally was all about monetary destruction, right? I mean, we stimulus was being taken away and the market freaked out. Because why does the market exist at this point? It exists strictly on a monetary basis. We haven't had actual growth in like 10 or 15 years. All of the growth, I don't want to get into the whole. I mean,
I know.
Yeah, if you look at the earnings per share growth and all that stuff, it's all completely manufactured, because what happens is companies have basically been buying back so much stock that it looks like they're getting per share growth, but on normalized share basis, like normalized profit basis, there hasn't been any growth in 10 years, because the economy hasn't really grown in 10 years.
Do you think that could exacerbate the decline, because they've also gone into debt? Corporate borrowings are huge, and they've used that to purchase stock, so they kind of have a margin account on their own stock, and if their stock value falls and rates go up, it's a double whammy.
It is a ridiculously dangerous scenario. There's no doubt in my mind. I mean, a lot of the super intelligent macro traders that I talk to, a lot of the big hedge fund guys that sort of have, more than a day's perspective on where things are going, are really working on this thesis that there will be a massive credit crunch. But the problem with sort of having that point of view from a trading point of view is that it could be a year from now, it could be a year and a half from now.
You could go broke first.
You could go broke trying to figure out the big macro turn.
I have.
Mechanically, you're absolutely right. Mechanically, there is just so much rot in the system, it will give way. But you just don't know when, so you keep on dancing until it does.
Got it. Okay. All right. So we've covered the markets.
I didn't realize this, but actually, you guys can. This is for the Orlando people, but you guys are also absolutely free. If you go BK4X/Orlando, the PDF to this presentation is there, so feel free to download it.
Okay. Cool. All right. Let's talk about what's going on with robots, because it sounds like it's not just like everything else a layup. So what's been happening with your?
So it is. I mean, the key thing is, let me show you the portfolio, right? So there's a portfolio of all the robots that we have trading right now, and you can see 1,500 pips. So it's not, it ain't bad. 1.3.7 profit factor, but within that, within that structure, this is a problem child. this is really killing me today. My point is, this is interesting. If you look at robots as employees, right? Yeah. Do you expect every employee to be an A producer? Of course you don't, right? There's always going to be a stoner who's going to come in late and always, call in sick, right?
Your top 20% will do 80% of the business.
And you know what? The Pareto principle, which is exactly what Dale is talking about, which is that in life, unfortunately, and we can get into the political discussion of why this is why we need socialism, because in life, in every aspect of natural habitat, 20% of all agents control 80% of all resources, always. And in fact, these days it's more like 90-10. I mean, the point is, it's highly skewed. I forget what the statistical term for it is, but it's just one tail is massively skewed to the other. And this is true in everything in life you do. Here's a simple way to kind of, this is kind of an interesting conversation. So allow me 5 minutes here to show you. So we're talking about a dollar index, right? So this is a 5-minute chart. Right? Let's actually, you know what? Let me go to like 15-minute chart. It's a little bit more visible, right? This is just a dollar index, but this is true for any currency pair, right? We have a 24-hour cycle of trading, right? Asia, Europe, North America. When does 80% of all price movement happen? 80% of all price movement in every single currency. US. Not even that. 80% of all price movement happens from 7 o'clock in the morning in the US till about 10, 11, right? 4 hours. 4 out of 24. What is that? I don't even know. Let me.
Yeah.
4 divided by 24.
75%.
That's actually 84%. So 16%.
Okay.
16%. 16% of all time. And this is guaranteed. Pick a day, pick a time, look at a chart. 80% of all movement is going to happen in that 16% of time frame. So this is
and I thought I was missing something in the European session because I used to see a lot of reversals happen there, but this opens my eyes. I mean, we're in the right zone to trade.
You are definitely in the right zone to trade, and and sometimes you can just sit here like I mean, look at dollar yen. This is the most mindingly boring currency ever, and let me go like on an hourly chart. I mean, this is a really horribly boring currency. But this is what? This is FOMC, right? So this is FOMC. So we had a big movement there. But generally, what you see here is dollar yen. This is hourly chart doing nothing. So this is I don't know what the hell this was. Doing nothing. And remember, yeah. So 7 to 10 is the most probable time. But occasionally, you may get some news and you get like an Asian movement, that is like a large point of view, and then it just dies. The whole idea is that this big volatility candle is no more than 20% of the 24-hour time frame. Like all action happens once. So there's a couple of interesting things to take away from that. First of all, you snooze, you lose, right? Why do most people miss their trades? Well, because if this is the 1 hour where everything moved and you weren't around, or you stepped away, or you missed it and your setup wasn't there, and then you spend the rest of the time just basically churning yourself away, right? Yeah. So that is just a clarion call to understand that you need to trade with a robot. But the other point of view is that nothing ever works 100%, right? As a matter of fact, as you were saying, only 20% of your ideas are really going to be really that good. If you look at our portfolio, the performance of our portfolio, you see that most of these things are kind of barely some of them are doing okay, some of them are doing kind of crappy, and some of them are doing super well, right? So there's like 2 or 3 how many of these guys are, and so this is a little bit confusing because these are monthlies, so it's actually only like 4 or 5 of them, but we have divided by the month, but it's basically 1 2 3 4 5 6 7 8 9 10 11 12. So it's like 12 robots, individual robots, and maybe only 3 or 4 of them are producing 200 pips, and the rest of them are kind of either losing money.
That's interesting. Boris, what kind of severance package do you offer robots when you fire them?
No super.
No oil. No oil under their arms and joints. Okay.
No
so, are you going to fire Power 1 hour Feb? You're going to fire that guy?
I am a good boss. I'm one of those kind of bosses that likes to really work with his people and help them grow and improve themselves. So actually, what I'm discovering is that it's not the worker, it's the environment. What actually works so much better, the reason why this thing is doing so poorly is the hourly charts on this particular structure are just a little bit too late. But if we put this same kind of structure on a 5-minute chart, it's going to get us into trades earlier, same trades earlier, and allow us to turn some of those losers into winners. So we're going to probably, one of the new things that we're going to do as part of our constant adjustment of what we do is we're going to take a lot of these currency pairs and turn them on the 5-minute chart and run them there and see if we can improve our performance. But that's literally life. I mean, that's how do you run a business? Every day you say, what donuts are selling, which ones are not, how can I make my donuts taste better, right? That's really what it's all about. So and that is why, by the way, I'm such a skeptic of backtesting, because who cares that, chocolate glazed donut was a seller in 1988, right? Right now, everybody's in a sugar-free diet. So what the hell does it matter that the chocolate glazed donut was a seller? Right now, everybody wants a muffin, or everybody wants a croissant, or whatever. Everybody wants a.
So really, everything, life, trading, everything is a process that's ever changing that we have to adjust to, or trying to get ahead of it.
It's always about tomorrow. It's never about yesterday. Yesterday is dead. All yesterday tells you is like, okay, these are kind of general principles of how people behave, but in order for me to really succeed, I got to figure out how I can take those principles and make them better tomorrow. You know, that's my attitude towards backtesting.
Okay, well, I tell you what, it was great hanging out with a philosopher and trader.
Thank you very much.
You know, Boris, and if you want, you could show the money show slide and the best place for people to get a hold of you. And heard you had a great success with the MT4 Trader Fest.
This was very, very good. We're definitely going to do another one, guys. So we already have a lot of interest for another one. So there'll be more stuff. But if you want to get all the free presentations and tools and everything else, and the free, those of you who are listening to me right now and going, yeah, this sounds great. I have no idea how to run a robot. I have no idea what to do. I don't know how this can happen. So let's just actually let me see. I'm just gonna. This is my personal account, so don't spam me. I think if we go over here, this will take you. Now, the coolest thing about this, by the way, is that I actually created a whole beginner course for people who know nothing about trading with robots, and this will take you step by step, all these videos in how to trade with MetaTrader 4. So it's all, you can access all of this just through that one link. Hopefully you guys will enjoy that.
Thank you, Boris, my trading warrior brother. Have a great weekend in Orlando, and maybe you'll have a chance to go to Disney World.
No, man, I am doing the true warrior style. In at 7, out at 8 p.m., man, one day out.
All right, Boris. Thank you, buddy, and good hunting, and let's stay in touch and do this again. And again, thanks for sharing that insight about the RSI change.
Exactly.
I think
watch the friendship, guys. It's going to give you a lot of really good ideas.
Yeah, great mentoring. Thank you for edifying faith today, Boris.
Take care, guys.
Take care, my friend. Okay, everyone, that's a wrap for Thursday. You know how to follow Boris at FXFlow on Twitter. And with that being said, good hunting the rest of the day. Remember, don't just count your pips, count your blessings. And we'll see everyone to wrap up the market week on TGIF. You're welcome, Alina, Alan, Hamid. I'll see everyone later. Adios.